Okay, so yes, now let's say pay attention to what you say. It's recorded. So yes, let's start maybe. So hello everyone. Good morning, good afternoon, or good evening wherever you are on the planet. So I'm Fabrice Testa. I'm the chairman of EBAN Space, which is the group specialized in space with EBAN, the European Business Angel Network. And I'm very pleased to be the moderator of this second webinar of our Space Live Talks 2020, which is a series of webinars this week that EBAN Space co-organized with NewSpace Capital. NewSpace Capital is a growth stage capital firm headquartered in Luxembourg. So during these webinars, what we want is to give you a 360-degree overview of the space industry pre and post-COVID. Investors will explain how they react to the crisis and which opportunities they see. They will also discuss about the opportunities and some public policies in place to support the space sector. And we will also have some entrepreneurs to explain which concrete actions they take to face the corona crisis. So today's webinar is focused on investment in space tech. And in 2019, 5.7 billion was invested in 135 startups. About 30% were US companies. And over the last 5 years, 52% was funded, or funding went to SpaceX and OneWeb, which is quite impressive. So yesterday, during the first webinar of the Space Live Talks, we learned that there are opportunities for investors today because of reduced valuation and revamped interest in sustainability, for example. Autonomous vehicles like drones are also gaining importance with the COVID. So it will be interesting to ask our speakers who will be the survivors, which markets will grow, and which advices they can give to investors. To help to answer all these crucial questions, we have the chance to have fantastic speakers with us, and let me introduce them. So first of all, welcome to Jeff Feige, who has been involved in the aerospace business for his entire professional career. He is the former chairman of the board of the Space Frontier Foundation that he held from 2013 to 2019 and remains an active board member of Space Frontier Foundation. He was also one of the founders of Orbital Outfitters, the world's first private spacesuit company, which operated between 2006 and 2013. And prior to that, he worked as an associate for Polyspace, a political consulting firm supporting space entrepreneurs in business development, government relations, and public affairs. In addition to his work in the space industry, he sits on the board of directors of Talon Aerospace, a lighting company focused on supporting the commercial aircraft industry. And he lives in Washington, D.C. He is today in Washington. And he has graduated from Drexel University, Philadelphia. So thank you, Jeff, a lot of being with us. Then we have, yeah, thank you. Then we have Mark Boggett. He is the CEO of Seraphim Capital, a London-based venture firm. The team managed the Seraphim Space Fund, a pioneering 90 million USD space fund backed by a range of leading space corporates like Airbus, SES, Telespazio. He is also the director of Seraphim Space Camp, an accelerator by Rolls-Royce, the STL, Inmarsat, ESA, and UK Space Agency. Mark is also a director of UK Space Tech Angels, and he is chairman of the London Co-Investment Fund. Prior to Seraphim, he was at YFM Equity Partners, where he served their main board for a number of years. And he has a master's degree in economics and finance from University of Leeds and a range of professional investment qualifications. And Mark is also one of our distinguished members of EBAN Space Executive Committee. So great, Mark, to have you here. Thank you very much. And last but not least, we have the pleasure to have Bogdan Gogulan, who is the CEO of NewSpace Capital, and he is a member of the investment committee of NewSpace Capital Fund 1. He has more than 15 years of experience in finance, product, and business development. Before initiating NewSpace Capital, he worked in communication, security, defense industries, managing breakthrough projects for security and defense agencies in the Middle East and Central Asia. Prior to that, Bogdan worked for American Express and Deutsche Bank, and since 2010, Bogdan actively cooperated with United Nations, participating as an ambassador in the UN Sustainable Development Goals Initiative. Bogdan is graduated in financial economics from University of Essex, and thank you very much, Bogdan, for being a speaker today.
It's great to be here with Mark and Jeff.
So again, if you have any question for our speakers, please type in the chat box. We will try to respond as much as we can to your questions. Also, please turn off your microphone and camera if you are not a speaker to avoid any background noise. So now we are ready.
Fabrice, just a very quick question. I believe Emmanuel is sharing the screen, so perhaps he can share like your screen or Mark's or Jeff when they are speaking. I'm really not keen to see myself for the full screen, but I think as far as Mark and Jeff is concerned, that would be a good picture, if it's possible.
Sorry, you don't see. You
want just a black screen.
Just a black screen, yeah. Just a black screen as far as so at the top we can see everyone.
You see a black screen.
Yeah, but we see the black screen at the bottom.
Okay, I don't know, because personally I see perfectly the screen. Mark, Jeff, what do you see?
I'm on black screen as well.
Black screen as well.
Okay. Okay, Emanuele, can you change it?
It's working now.
Is it working?
Yes.
Now it's working? Okay, thank you.
Okay.
Thank you for this. So let's kick in the discussion, and let me start with Jeff. So Jeff, you have a very comprehensive experience in the space industry. What is the general condition of the new space industry today, and where should interested investors be looking in the industry today?
Sure. So there are a couple things that I would sort of draw out. One, there's been I think the biggest shift is that my impression is that investors are now beginning to understand a little bit where the market is going. So you're seeing less of the rush towards, one of the big stories at the end of 2019 was that we were approaching, was it 200 small launch companies was the figure. I'm sure Mark or Bogdan could give me a better figure. It changed daily, so it was harder to chase. And now you see the beginning of that consolidation coming together. You see a focus on companies that can clearly articulate their business plan, that can clearly identify where they're going in the future. So you see that process beginning to beginning to really mature. The other thing that I think that the sort of COVID has forced a little bit is that it's forced a focus on companies that really do have something transformative. So those companies that were a little more, making an improvement at the margins, but only a modest improvement, those I think have struggled a little more when you have something like the COVID coming on. So the big takeaways that I would sort of point to in the industry, the big things that I see sort of coming along is clear business plans, clear technology ideas. Those companies are still successfully raising funds, and there are far less of them going on than where we were just at the sort of fourth quarter of last year, because people aren't allowed to go to meetings. They're not interacting in the same way that they were. But you do see investment occurring in companies that are fundamentally transformative, that have a clear articulation of the market that they're going after, that can point directly to customers. I think those are the big takeaways. Can you point to your customers? Do you have a clear articulation of what you're doing? Do you know exactly who's going to be the revenue source sitting at the other end of the development work that you're doing? The companies that can answer that, COVID's a frustration for everybody, but those that can answer that well, I think, are sitting in even almost an even better position for for a few of them and at least a good position for everyone else.
So there is somehow some more exigence from investors, is what you mean?
I think that's right. I mean, of course, in a situation like this, there's going to be a large number of people who sit back and say, well, I want to see how this plays out. But there remains significant opportunities within the NewSpace sector. Companies that are organized, have good teams, have clear customers, and that are tracking on their goals, even while we're all in lockdown, those companies remain good investments. And the fact that they're not, many of them, especially the early stage ones, being not reliant on customer revenue at this point can be an advantage in a situation like this. Yeah. Sort of companies that had just begun to rely on customer revenue are the ones that are going to get hurt the most, whereas those that are still developing, now can be the perfect time for them.
Yeah, sure. So companies that in space then rely on NASA programs or ESA programs, they are less affected, of course, than the ones that depends on customers.
Sure, but I would go yes. I totally agree with that, and I think there's value in talking about, making sure that you sort of mix your revenue streams for young companies. That some of your money, if possible, should come from government. Some of it should come from customers. There's a whole story to be told there. But I think in addition to that, I would also highlight that a company with say you have a very strong concept, but you're only 20% of the way through your technology development, those can be ideal investments right now because they're not life and death really depends on investors understanding your technology. It doesn't rely on customer revenue in the first year or 2 years. For those companies present an opportunity as well, and that's what I was looking to highlight.
Okay, thank you, Jeff, for this. Very interesting. Mark, what are the Seraphim investment plans for 2020-21, and did you change your plans because of the COVID-19 situation? And particularly, I'm interested to know, and I think the audience too, that we know that Seraphim is very active in UAVs and drones, and we know that there is maybe some interest for everything which is autonomous. So is it something which is accelerating now?
Yeah, so like most venture funds, when the COVID crisis hit us, we spent the first period of time just looking after the existing portfolio. And our strategy of investing alongside other investors when we're making new investments has served us very well. So most of the companies that we invested into had pretty strong syndicates. So we were able to work alongside other investors and put in fresh capital to make sure these companies, on the whole, had 12 plus months of funding runway. So that exercise, we've gone all the way through that now, and we've done that, working really very closely with the companies, but whilst putting in new capital, but also encouraging them to make reductions in their overhead, to furlough staff, and to introduce salary sacrifices. So there was a lot of hard work that went on for the last few months, and that's now largely behind us. And it was really interesting to see how the different CEOs of the portfolio responded, and in particular companies that had 12-month funding runways still implementing salary sacrifice to senior members of the team and across the board, and how that's played out to extend their funding runway. So I'm sure we'll come back to that, but it's been an interesting period of time. I think you get to see the type of founders that you've backed in times of hardship, and it's been interesting to evaluate those that we've put money into and continue to do so. Yes. So that took up most of February, March, and April. So it's really only since we've come into May that we've now really started looking forward. I say that, but we did close a new investment in April as well. So we've continued making new investments. That investment was into a very bold company that with a huge vision. It's a LEO-based GPS business in San Francisco. So no revenue yet. It's going to grow. It needs 300 satellites in order to get to its constellation to deliver its service. But we're still backing companies that have got a huge vision for this market. And as Jeff was saying, companies at that sort of stage are really immune to what's going on for the next couple of years, because they're funded to develop their business without any expectation of accessing revenue over that time, so they can really focus on doing that. So we've really started now, and we've now formally reviewed our strategy, our investment strategy, and implemented quite a significant change. So we were preparing to start reserving most of our capital for the existing portfolio. But we have significant capital reserves. And what we've decided to do is to actually start making a series of new investments. So during the balance of 2020 and 2021, we're going to make something in the order of 10 new investments. And the idea here is that investing at time of crisis is probably the best returns that can be made in the class that we're focused on. So we're making sure that we've got a good balance across the portfolio with companies that we invested into prior to the crisis and post the crisis. So to put that into perspective, we've got a portfolio in the fund of 13 companies at the moment. And if you include all of the companies through our Space Camp Accelerator, we've got a portfolio of about 60. So we'll get into the 20s in terms of the portfolio. So the type of things that we're now looking at are pretty polarized, and I think Jeff articulated it really well. In fact, it sounds like he was listening into our investment strategy sessions, because we really are sort of polarized as the type of businesses that we're looking to invest into. So first, we're looking to invest into those businesses that are showing strength through the downturn. So the strongest players in each of the subcategories of the space tech market. And as you rightly mentioned, Fabrice, we also include high altitude platforms and drones within our general definition, and we treat them all absolutely equally. So we're looking for the stronger players there. So this gives us an opportunity to perhaps invest into companies that we thought we'd actually missed the boat on. They might have done a B round and we didn't get a chance to invest into their A series. And there's an opportunity for us to invest into some maturer businesses that are accessing capital from investors, just to make sure that they've got sufficient capital reserves to see them through the uncertain times ahead. So those are one category of the type of businesses that we're looking to get involved with. And many of these businesses are raising money at the moment to take out some earlier stage startups that have developed really interesting technology, where they're largely going to be using their paper to make these acquisitions, but they still need the additional capital because they're going to be taking on additional and unbudgeted overhead if they start acquiring these businesses. So for a number of our portfolio companies at the moment, we're drawing up lists of potential acquisitions, and we know some of the maturer companies that we're looking at are doing exactly the same.
And Mark, we know that a lot of money went into launchers, and I know that Seraphim is more investing in downstream applications. Do you think that there is going to be more and more investment in the downstream, or the upstream will continue to, let's say, take a lot of the investments? I mean.
Yeah, so I think so I'm talking about our investment where we are. Actually, most of our portfolio is more in hardware than software. So we're actually more upstream than we are downstream, which surprises even myself. I think for the sort of next 12 to 18 months, that companies that are software related businesses are going to be more successful in raising money, and will find it easier to access finance. Whereas hardware companies, I think, are going to be limited. They need to rely more on their existing shareholders, and they are going to find life a little bit more difficult for the next 12 to 18 months.
Okay.
So just to go back and just finish what I was saying in terms of our strategy. Sure. So one end of the strategy is the stronger players, the more mature players where we're participating. In the middle of our strategy are a group of companies that are demonstrating traction despite COVID. So these might be companies that have got a great exposure to defence and intelligence, for example, where there is a really robust procurement going on, and I believe will continue to do so right the way through down the cycle. So they will be able to demonstrate traction and growth in a period of recession, and I think that's going to put them in a powerful position when they come and start fundraising again in the next 12 to 18 months. So we're going to invest into those type of businesses as well. And then the third category, and this was the most difficult one for us to agree as a revised strategy, but investing in the companies that are still early stage, but with giant and bold ambition, because they are to some extent, as we've discussed, immune from the next couple of years until they need to start getting revenue. So they can be going on and building their business and drawing on the grants that they have and the investment capital that they're able to obtain in order to build out their business. And then once the market starts to recover, hopefully that will coincide with when they're looking to get the investment. So yeah, so we're doing seed stage businesses. An example is that NewSpace that I just described, a GPS-based LEO business that is years away from revenue and has got an awful long way to go before it's got its constellation of satellites in orbit. But we're very much interested in those. So I think that in terms of numbers, we're broadly going to split that evenly across the companies that we're going to invest into, with about 3 or 4 in each category.
Okay, thank you, Mark. Bogdan, maybe you can talk about NewSpace Capital, and if you could also explain if you see any successful business model for NewSpace actors post-COVID-19, and how investors, and particularly NewSpace Capital, you look at them. I think it will be interesting for our audience. Thank you.
Yeah, sure. And look, as far as response to COVID-19 is concerned, I think, well, as any other player in the market, when we started looking at it, we wanted to understand how this crisis is the same as previous crises, and how it's going to be different. And some of the things kind of were expected, and some were surprised. But in general, I think if we compare that with, say, .com crash back in 2000s, I think businesses right now are much more resilient, just simply because the management is much more mature. We've been through so many crises over the last 10, 15 years that I think crisis is basically kind of business as usual. And so people just much better prepared, I think, much more level-headed and kind of planning for that. And I think a lot of resilience with the good companies, a lot of resilience was already built into the business plans, and it was just more kind of adjusting the business plans rather than drastically reviewing them and setting different objectives. And second thing is, I think what was important in this crisis that was different from 2008, 2009 is that we had very fast response from the governments in terms of the fiscal stimulus and monetary stimulus. And that was very reassuring, and I think that also kind of helped the markets, and I think it could have been much worse than it actually was over the last couple of months. And then, so these two things were kind of, it's not necessarily you could expect that. Now, the third thing is something that does usually happens in the downturn, and this is the flow of funds into private equity. And so we've seen that throughout the first quarter and kind of the first couple of months of the second quarter. And there was significant inflows of funds into private equity. So people were looking for safe havens, and they were looking for kind of brick and mortar businesses. And because of that, there was significant inflow. Liquidity, as far as the private equity markets are concerned, is not really an issue. So it's more on the company side where you need to manage the portfolio, manage the pipeline, and manage the risks. But as I mentioned, well, the founders and the management teams are much more mature in their approach. And it was very interesting to see that for a lot of companies, their performance during Q1 and beginning of Q2 was actually on par with their long-term business plans, or in some cases even better than they anticipated. The performance might tip a little bit later in the year because, of course, there is a restriction on travel, and some of the business, is still done face to face. But in general, I think kind of the companies are adjusting well to the environment on the short-term basis. Now, for the long-term basis, what's happening is we see acceleration of dramatic change in the economy, structural change in the economy. I think, once that structural change happens, the traditional businesses are going to become more dependent on space applications. So we're already used to, connectivity and, entertainment and, geopositioning, geolocation businesses being dependent on space applications. But what is interesting is that, and, when you talk to the investors that are kind of traditional companies outside of their space business that are interested more and more in space applications to improve their management of the supply chain, with IoT, again, with geolocation services, or to help them to manage things using the Earth observation applications. So businesses are just in general becoming more and more space dependent. And that brought a very interesting dynamic that, look, before it was the case for many companies that space was the risky part of their business. And then aerospace and other applications were kind of, the cash generating part of their business. And in the last couple of months, of course, with complete shutdown of aerospace and travel, it turned out that what used to generate cash actually became kind of the problem child in their product portfolio. But the space part is continuing doing well, and strategically is just positioned really well. So because of that, those companies, even those companies for which space is not their core business, but it's just one of the things that they're doing. And I mean, in NewSpace, we really like this kind of companies with diversified revenue base, diversified risks. But it's interesting to see that those companies that kind of do many things plus space, for them, space is becoming a bigger part of their core business and a bigger part of their strategy. So that's very interesting, and we expected that to happen, say, over the course of 2-3 years' time. But COVID really accelerated that, and it effectively happened in the space of a few months.
Okay.
And so and kind of our strategy is effectively built around capitalizing on these trends, and of course carefully looking at what else is going to emerge on the market.
Thank you, Bogdan. Look, we have a first question from the audience. Is Maria? Hello, Maria. Thank you for being here. And she asked, and maybe Mark, you can answer to this question: how stressed are the valuations in the space sector, and which ones have been heavily hit? And is there a significant correlation between economy's drawback and space startups' valuations? I think it's a question that is always asked, and mostly by entrepreneurs, but also investors. So what about the valuations with the COVID?
Okay, so also first of all, there is there's been a brilliant piece of research done, quite a large scale research with startups done by Slush, the Finnish organization. So I recommend everyone takes a look at that. They reckoned that valuations are down sort of 20 to 30%, And the reason why I brought that up is that very much sort of accords with my own experience. So the deals that are getting done still in this environment are sort of 20 or 30% down on what they were previously. Like any crisis, it takes a period of time for adjustment. So I don't believe that the discounted evaluations has yet been really seen. So I think that is going to come in the next 6 to 12 months, because I think that the real hardship for fundraising is actually going to come in that period rather than it being like today. And I think that's when we're going to see the biggest adjustments. What I think we'll naturally see is a flight to quality. And that is companies that are able to raise money, and they're able to raise money from a good syndicate of investors. Those companies are going to be able to potentially even raise money at a premium, because those are the companies that investors want to back. Those that want to be backed by others, where there's plenty of funding around the table. So I think for the strongest players in the sector, that there'll be a limited fall in valuation, and then I think at the other end of that spectrum, there'll be companies that can't raise money at any valuation. I think there's going to be a lot of them. We foresee heavy casualties in the next 9 to 18 months, where the question of valuation doesn't even really come into it.
Okay. Thank you for the answer. Jeff, can you maybe give some perspective how NewSpace companies are operating in the COVID-19 environment? And also, and it was already a subject addressed at the webinar yesterday, what is there is a collision somehow about the government and the NewSpace, and mainly in the US, it was discussed about the defense programs, etc. Maybe you can also a bit explain your view about this.
Yeah, sure. There's a lot to say on these topics, but it's an interesting thing. Not so long ago, as maybe fourth quarter of last year, it was when you went and talked to an investor about an emerging NewSpace business, it was always a lot of enthusiasm about commercial customers and kind of soft enthusiasm about having government customers. Because government customers, they're governments, they come with a lot of baggage. They can sort of force you to carry more overhead than you might otherwise. They can kind of drag your company into a direction that might not be ideal. When I certainly earlier in my career, it was always kind of a maxim that if you built a company around government customers, then you would never be efficient enough to serve commercial companies, period. And that was just a known fact. And so up until very recently, there was always, well, you should, I guess, maybe have a few government customers, but for the most part, you should drive your business around commercial customers. And now those companies that had kind of a mixed customer set, where they had several strong government customers mixed in with a large number of commercial customers, those are the ones who are almost sitting in the best possible situation. Because even companies with really long lists of commercial companies have seen a lot of those customers either up or even more likely say, well, we're going to delay the purchase of this or that. We're going to delay it for a fixed period of time. We still want to buy your product, but we don't want to buy it for a year. We don't want to buy it for 18 months. And in that environment, all of a sudden, the government customer who pays on time, who is always going to be there, is very important. And you've seen that, especially on the defense side. I think there have been now 3 speeches where Dr. Roper has said this, and other officials at different levels within the entire the DoD space sector is so large, it's hard to capture it in just a few words. But you do see, when they talk about NewSpace, the key messages that are coming out is the importance of maintaining and supporting companies that they're already involved with. So companies that have existing contracts are seeing those expanded or extended. You also are seeing you are also seeing a significant increase in I would say the creativeness within the government space sector. Historically, it was always, at least in the US, and particularly on the military side, it was a very rigid, well, you know, multi-year process of securing funds. If you wanted to go after a big government customer, maybe anything over, you know, single-digit millions, you had to know that this was going to be a multi-year business development effort with full-time staffs working this, you know, all sort of hitting multiple places around the country to accomplish that. And now I wouldn't say it's perfect, and I wouldn't say it's running, you know, exactly as they want, but there's a real effort to try to understand what's going on in the new space sector and to try to bring in more companies, more innovative ideas, more innovative thinking. You're seeing a real focus on that right now. And, you know, multiple different types of solicitations, like what we see coming out of AFWorks with the space challenges, like the changes that we're seeing with the small business and innovation solicitations. Those things are really maturing, things that not so long ago was always a discussion of, you know, we should, you know, I guess we should go after it, but, you know, are we really going to chase that kind of work? Those sorts of discussions are evolving right now, and those sorts of opportunities are increasing. And there does seem to be a real understanding on the government side that the new space sector is potentially revolutionary to the defense sector, and letting the entire sector wither or even large parts of it die just because of the however long we're stuck with the COVID crisis, that would be a risk to the US economy, and even more importantly, potentially, you know, US national security and defense. You're seeing that realization, and you're seeing people act on that. So it's an exciting time that way. I expect a lot of new news essentially in the to be developing over the next year or so in that area.
Okay, that's very interesting. Bogdan, you may comment if you want on this topic, but there is also a question from Talal, and he is asking if you would have, let's say, 100 million USD to invest in 3 space companies, what will be these companies, or which kind of companies, if you don't want to name some potential candidates? What will be the potential, let's say, companies where you would invest 100 million USD?
Yeah, and look, I encourage you to ask the same question than to Mark.
To Mark, yes, yes.
Because also,
I will.
Look, as far as Talal and myself are concerned, we discuss this topic maybe every week, so he's not going to be surprised with my answer to that question. But I am surprised with his disclaimer about that he doesn't have 100 million USD. I thought we agreed. Okay. But
well, let's not comment on this.
Yeah, but look, I would say 3 sectors in principle, yeah. And so first one is that look, I think what happened, so I'm going to start from far, yeah, but basically what happened with Intelsat and with OneWeb, yeah, is of course, you know, raises concerns among the investors that does that reflect on the space business overall. And I think, first of all, it's important to understand that what happened with both companies, what happened with the companies, kind of the same result, but for 2 very different reasons. Yeah. But partly what been happening with OneWeb is that, look, it's very difficult to develop a new market. Yeah, it's not just a new constellation; it's a new market. It's a completely new ecosystem. It's just, you know, starting everything from scratch. And look, everyone who is following in OneWeb's footsteps, or maybe not following, but we may say looking to do similar things, they're going to hit the same hurdle, and this is the ground segment. And so the antennas, and until we have, really efficient, both in terms of the cost efficient and in terms of the simplicity of installation and operation, we have really simple flat panel electronically steered antennas or phased array antennas. Until we have that hurdle solved, we're going to have problems with LEO constellations for the communication purposes. And so one of the areas where we're certainly looking, and we have some very interesting technologies in the pipeline, is in that segment. And then the second segment would be Earth observation, but those companies that have either unique sensor capabilities or really unique analytics capabilities. These unique analytic capabilities either can come from the fusion of data and some unique algorithms, or is just going to come from their sort of unfair competitive advantage in terms of the computing power and distribution. But so the Earth observation, that would be the third the third segment. But if in the first segment, the ground segment, I think there is a number of technologies, a number of interesting companies, then I think as far as Earth observation is concerned, we would be much more selective. And then the third one is a very, I think a very interesting segment of the market is robotics, and kind of overlap of the space robotics and the ground robotics. Both in terms of the hardware, but even more so in terms of the software and combination of the computer vision and AI. Because this is the part that is crucial for the space exploration, wherever you look at it. We're looking at the Moon, Mars, deep space exploration, the further developments on the International Space Station. And then also this is something that is more and more in demand on terrestrially. So that would be the three segments that we are looking at.
Okay. Mark, do you want to comment on this?
Yeah. So, well, first of all, space is a long-term investment. So the reality is, when it comes down to selecting subcategories or subsectors, but our thesis remains largely unchanged through the COVID crisis. It takes time to build a great company, and this crisis will eventually look like a speed bump on the path of any startup's journey to success, and we recognise it as that. So, in terms of where we're interested in investing, it's the same today as it was a quarter ago. Really, we're looking to invest into a category defining companies within each of the different subcategories of the overall space ecosystem. So we very much believe in the power of a large constellation bringing near time data, and we think that's really where the value is. And as I've already demonstrated, we continue to put money to work in companies that are aligned with that vision. So we're very much constellation first, and recognise all the risks that come with that, but we think the rewards are continue to be worthwhile. And then really it's around. Bogdan articulated it really very well, but we're interested in the movement of data, particularly the secure movement of data when it relates to space. We think that there's massive opportunity there. And really anything that touches mobility in relation to space, because again, those are just massive mega trends in their own right that we're trying to invest at the intersection of where they hit space, which in itself is a long-term mega trend. So really, our thesis hasn't changed. So we're not trying to identify three subsectors and pile our money in. We're trying to identify who could be the best in each of the 30 subsectors and be driven by seeing fabulous teams that are trying to do something that's groundbreaking, rather than really trying to focus on which sector we should focus money into.
Okay, thank you, Mark. Dimitris is asking, and maybe you three, you can respond, because the question is addressing US, EU, and emerging markets. So maybe Jeff for US, maybe Mark for EU, and Bogdan for emerging markets. What is how, let's say, COVID is impacting the VC, the space VC scene in these three markets? Is one more affected than the other? Maybe Jeff for the US. What do you think?
I gotta say this. So this is an area where I'm a little thinner, so I'll let the other guys lead it.
Okay.
More so. But the one thing that I would say in general is that the effect that Mark described early in his presentation, where for the first quarter or so, everybody just kind of sat back and said, whoa, like, let's just see where this is going. That has, sort of a waterfall effect where, to some extent, some of the VCs, and it depends on who they are and, their unique circumstances, but I've certainly seen some of the VCs where their LPs were standing back and saying, well, I committed a certain amount of money and I'm still probably good for it, but I'm going to wait 3 months and see where this goes before I put my money into this VC, even though I might be committed to it, even though I was planning on it. And so that, in turn, the VCs are going to be more conservative with how many investments they make and how quickly they make it. So certainly early on, I think we saw that kind of effect. Whether that's still going on, again, I think these other two guys are the specialists. But as far as the VC sector, I have seen that as something.
Okay. Bogdan, you want to comment?
Yeah, sure. Look, as far as emerging markets are concerned, I'll leave European Union to Mark. Yeah, and look, from the emerging markets, well, kind of the country that is considered as an emerging market in terms of the overall global economy is, and which we know intimately, is UAE.
Yes.
But then in terms of the space market, look, you can't really call UAE an emerging space market. Look, it's probably one of the top 3, maybe top 2 new space markets globally right now. And it's very interesting to see that there is a lot of things are going on. And if at the beginning of the year, once oil prices started tumbling, we did have a concern that it's going to have an impact, but actually it didn't, vice versa. So it kind of forced thinking about, okay, what is the diversification of the economy? What needs to be done? How can we accelerate that? Space is definitely a very important part of this diversification. So therefore, let's focus on that. And so Talal, who earlier asked the questions, there's a number of projects that we're working with the UAE Space Agency on right now that are very interesting, and probably Talal is busier than ever. And it's very interesing to see. And
there is a panel where Talal will be part of it, so I encourage people to attend this panel.
Yep, absolutely. I think it's going to be very interesting, and also just going to be a telling story for a number of countries. And also it's very interesting to see that the traditional companies that, brick and mortar, they are more and more interested in space. In the same way, the traditional investors that used to invest in brick and mortar, and for example, those investors in the UAE that traditionally invested in the, for example, property, now they expect that whatever happens in the markets right now will have a knock-on effect on the property, and are looking for new class of assets for their portfolios, and started really seriously considering space, which wasn't the case, for example, 9 or 6 months ago. So that's kind of experience from a small set of the emerging markets that okay. I'm more familiar with.
Thank you, Bogdan. Mark, how do you see the impact of the VC in the different parts of the world?
Yeah, so I'm really quite concerned about the outlook for the space tech sector overall. I think it's going to be disproportionately hit in terms of the appetite of the venture community relative to other sectors. Last year, 250 VCs invested globally into space tech. and over the last decade, more than 750 VCs. But in most cases, this is VCs dipping a toe into the space market, in many cases accidentally. They weren't out there looking for space-related technology companies. They just happened to meet a good entrepreneur, and they got pulled in. So when it comes to times of crisis and difficulty, I think that that investors tend to focus on areas that they know well. They'll tend to focus on sectors where they've made money in the past. They're much more comfortable understanding how the sector is going to respond, both going into and coming out of a crisis. And that's a shame for the space tech sector, because we haven't really been around long enough for investors to really have that experience. So I think it's going to make investors, if they've got a choice of two companies to invest into, one's a space tech company and others a more terrestrial company that they have an experience in, that the latter will win more times over. So I think disproportionately there's going to be less money available to space tech companies, and therefore they're going to be focused on the better quality of the companies. And then it goes down to looking at sort of EU versus US and versus Asia. The EU investors are recognized to be more conservative. And I think in times of recession, they're going to revert back to the stereotype there and just become more cautious. So I think that relatively speaking, that the EU is probably going to be worse hit than the US in terms of the availability of venture funding for the space tech sector.
Okay. Thank you, Mark. Look, this discussion is very interesting, but we are approaching, unfortunately, to the end. I would like to make a wrap-up, and maybe after the wrap-up, maybe you can give 1-2 minutes to give your last message, let's say, to the audience. So I think that it's clear that because of the COVID, there will be a focus more on better quality of companies. Probably that investors globally will be more cautious about how they invest money. And Mark just mentioned that, yeah, maybe if they have to make some choices, they will probably do non-space investments. So yeah, if there are some space entrepreneurs in the room today, yeah, be attentive to this. Also, it was mentioned that probably there will be more, let's say, investment in software than hardware. Among the segments, probably that everything which is data analytics will still be of interest for investors. Also, it was mentioned robotics and software, computer vision, AI, large constellations will remain something interesting for investors. What was also mentioned is that somehow the management of the companies and maybe the management of also the investors are more prepared to resist to the crisis, because there has been several crises before. And there was also some fast response from governments to help for this. We also discussed about the valuations that are 20-30% down. Yeah, and so this gives some opportunities, I think, for investors, the fact that the valuations are down, and there are anyway some interesting, let's say, space areas that help post-COVID. I'm thinking about telemedicine or remote, let's say, education. Also anything which is for tracking, for example, pandemics, etc. We have seen quite a lot of interest in these kind of technologies. So, gentlemen, we have a few minutes. So maybe in 1-2 minutes, can you give, let's say, deliver your last message for the audience? I will check if there are some last questions, but otherwise, if you can give your last message. Maybe Mark, you want to start?
Yeah, sure. So I'm tailoring my messages to investors, given that this is an EBAN group. So yes. I'm assuming that they're investors. So I've really got three pieces of advice to put out there. So first of all, my recommendation is don't focus on valuations, focus on quality. That's number one. I wouldn't be chasing lowly priced companies. I'd be actively trying to identify companies that have the capability to actually demand a premium and try and understand why. Secondly, I would look very, very closely at your co-investors that you're going to be getting into bed with. The syndicate has never been more important, and understanding the capabilities and capacity of the people that you're investing alongside, I think, is hugely important. If you can't understand what their capability is, then don't invest, because they're probably holding back information for good reason. And then my third point is that we believe that the crunch time is not now. It's still 6 to 12 months away, really, when we're going to see the scenarios that I talked about, where you see a freezing up of the venture industry's interest in space. So any investments that you're making now, I would encourage you to make sure that they've got 18 to 24 months worth of funding, and that the investors that you're co-investing alongside are making commitments to that time frame if the money's not all going in now, because 12 months just isn't enough. And the last thing in the world you want to be doing is going and raising money in 12 months' time, when we're really at the sort of peak of the lack of capital for this particular submarket.
Okay, very interesting. Thank you, Mark. Bogdan?
Yeah, Fabrice, I actually wanted to ask you the same question, that if you can leave a couple of thoughts with us in terms of the angel investment, because Mark has invested in early stage, where we are focusing more on growth stage. And so together with your insight and what's happening in the space market, then we would cover the complete ecosystem. And I think you can see, for example, the views that Mark has and I have might differ in some places because of the difference in the stages that we invest in, and also in the geography. So therefore, it also would be very interesting to hear your views in terms of the angel investment in space.
Thank you, Bogdan, for asking. I think angel investors, they intervene, let's say, at an earlier stage than, for example, a fund like Mark or yours that is more for Series B and beyond. So I think what you mentioned about the quality, anyway, I think personally, and I think a lot of business angels, they are looking a lot anyway at the quality, even if maybe on the business angel side there is maybe a bit more of affect which intervene in the decision. I mean, probably there is less due diligence that what a VC can do, because as a business angels, you don't have a lot of analysts, etc., working for you. So probably it's more a question of feeling somehow. And maybe with the COVID, we will, let's say, try not to rely too much on the feeling, but maybe to come back to the fundamentals. I think probably there will be some sort of, to be quite careful before investing, because there is a general climate of somehow fear, uncertainties, etc. So probably the business angels will become more prudent, this for sure. In terms of the different sectors, I think for constellations, I think it's a bit complicated for business angels to invest in constellation, because very early you need a lot of funding, so probably not. I see more business angels who invest probably in data analytic companies. That's something which is which doesn't require maybe initially a lot of money, and maybe where the business angels can help also with their connections to try to find the end users. So yeah, I think that's my 2 cents, and thank you, Bogdan, for asking.
Thank you for sharing.
Thank you. So maybe Jeff, you want to say 1 minute and before we close this webinar?
So rather than rather than speak from a sort of investment standpoint, I'll speak of, I have been an investor, but I've been an entrepreneur for a lot longer. At the end of the day, the companies that are going to make it, it's all about the team.
Yes.
And, Boggett talked about team experience. Mark talked about, a rush to quality. But at the end of the day, these are all the same things. These are all, do you have a management team that can look at the environment that we're in right now and come up with a plan, whether it's pivoting the company, whether it's taking the company in a slightly different direction, whether it's refocusing plans, whether it's adjusting salaries and expenditures, whatever step needs to be taken. At the end of the day, the real key here is the quality of the team. And so that's what it's fundamentals. It's back to basics. Doesn't matter whether you're a VC or a late stage or, an angel at the very beginning, making the first investment in a company that's ever been made. At the end of the day, either you're picking a good team or you're not. So that's something I always try to drive people to. Don't have an okay team member in one of these companies. It has to be companies that have the strongest possible teams. And I've always tried to do that with the projects I'm associated with. And if I was going to give any advice to any investor at any level, it's always team at the end of the day. So.
No, that's very true. And yes, thank you for pointing out this, because it's very true that, let's say, behind any business, it's a team and it's people. And it's probably the most valuable asset of the company. So look, unfortunately, we cannot continue the conversation. I encourage anyone to connect with the speakers on LinkedIn if you want to continue the conversation with them. Thank you a lot, Mark, Bogdan, and Jeff. It was very interesting. I enjoy very much this. I encourage all the attendees to register for the rest of the webinars. There is one in 25 minutes, and there will be another one tomorrow, after tomorrow, and Friday. So please register if not yet. And I hope we will, we will see you soon in another one episode of the Space Live Talks. Thanks a lot, and have a good day, guys.
Jeff.
Thank you, everybody.
Good seeing you guys.
Bye-bye.
And hope to see you all in person sometime soon.
Yeah.
We hope so. We hope so.
Sounds like a plan.
Thank you. Bye-bye.
All right.
Bye, everyone. Thank you.
Thank you. Bye.